Silver is sitting at $84 an ounce right now. That's not a rumor or a projection. That's the actual price as of today. And a lot of people are starting to pay very close attention because $100 silver isn't just a fantasy number anymore. It's a level that serious analysts are putting on the table. So the question is, how close are we, really? Let's start with where silver has been. For years, silver spent most of its time stuck below $30. It felt like the metal just couldn't catch a break. Then 2024 happened. Silver started climbing in a way that caught even longtime holders off guard. It crossed $30, then $35, and kept going. By the time most casual investors noticed, it was already above $40. Now here we are at $84. That's more than doubled from where it was not long ago. So what changed? A few things came together at the same time. Industrial demand for silver has been rising steadily for years. Solar panels alone require an enormous amount of silver. Every panel that gets installed uses silver in its cells, and solar installations are going up all over the world. Electric vehicles are another piece of this. EVs use more silver than traditional gas-powered cars. As EV production scales up, the demand for silver scales with it. Then there's AI and data centers. Modern electronics require silver, and that sector is exploding, so the industrial side of silver demand is genuinely strong right now. That's not hype. It's just the reality of where the global economy is heading. But here's the other side of this. Silver isn't just an industrial metal. It's also a monetary metal. People buy silver when they're worried about inflation, debt, and the value of paper money. And right now, there's a lot to worry about on that front. The U.S. national debt has crossed $36 trillion. Government spending shows no sign of slowing down. Interest payments on that debt are now one of the biggest line items in the federal budget. That kind of fiscal pressure tends to push people toward hard assets. Gold has already reflected that. Gold crossed $3,000 an ounce earlier this year. When gold moves like that, silver tends to follow, eventually. And that gap between gold and silver is something a lot of people are watching. The gold to silver ratio is still historically wide. Historically, it takes far fewer ounces of silver to buy 1 ounce of gold. Right now, that ratio suggests silver is still undervalued relative to gold. If that ratio narrows even a little, it could mean a significant move up for silver. So the setup is there. The question is whether the price follows. Let's talk about the supply side for a minute. Silver mining hasn't kept up with demand. That's not an exaggeration. It's a documented trend. Global silver mine output has been relatively flat for several years. Meanwhile, demand keeps climbing. When supply stays flat and demand grows, prices eventually respond. That's just how markets work. And silver has a unique problem that most people don't think about. Most silver isn't mined on its own. It comes out of the ground as a byproduct of mining other metals: copper, zinc, lead. That means silver production is partly tied to demand for those other metals. If copper mining slows down, silver output can drop too. So producers can't just flip a switch and produce more silver when the price rises. It takes years to develop a new mine. Permitting, exploration, infrastructure, all of that takes time. So even if miners wanted to respond to higher prices right now, they couldn't do it quickly. That creates a structural tightness in the market, and that tightness isn't going away anytime soon. Now let's talk about above-ground silver stocks. Unlike gold, a lot of silver gets consumed and doesn't come back. It gets used in electronics, coatings, and industrial processes, where recovery isn't practical. That silver is essentially gone. Gold, on the other hand, gets recycled at very high rates, so the above-ground supply of silver is actually more limited than most people realize. That's a factor that rarely gets discussed in mainstream financial media, but the people who follow silver closely understand it well. Now, where does $100 fit into all of this? Honestly, it's not that far from where we are. Silver is at $84 right now. That's only about 19% away from $100. For a metal that's already more than doubled, another 19% isn't a stretch. That could happen in a matter of months under the right conditions. So what conditions would push it there? A few scenarios come to mind. If inflation picks back up and the Fed is slow to respond, hard assets tend to rally. If the dollar weakens further against other major currencies, silver prices in dollars go up. If there's any kind of shock to the financial system, a banking scare, a debt crisis, silver historically spikes. And if industrial demand continues growing faster than supply, the fundamental pressure builds. Any one of those things could be the catalyst. All of them happening at once would be significant. Are any of them likely? Look at the headlines right now and decide for yourself. The macroeconomic environment is not calm. Trade tensions are elevated. Geopolitical uncertainty is high. Central banks around the world have been buying gold at record levels. When central banks buy gold, it signals something about their confidence in paper currencies. Silver tends to benefit from the same sentiment. So the backdrop for a continued silver rally is genuinely in place. Let's talk about who's actually buying silver right now. It's not just preppers and gold bugs anymore. Institutional investors have been increasing their exposure to precious metals. Hedge funds have been adding silver to their portfolios. Even some pension funds are looking at commodities as a hedge against inflation. That's a different kind of buyer than silver has historically attracted. And when institutional money moves into a market, it moves prices in a serious way. Retail investors are also coming in. Silver coin and bar sales have been strong for the past couple of years. The U.S. Mint has reported high demand for silver eagles consistently. People are buying physical silver and holding it. That physical demand takes real metal off the market. It reduces the supply available for industrial users and traders, and that tightening shows up in price over time. There's also the paper silver market to consider. Silver futures and ETFs represent enormous amounts of silver on paper, but the physical metal backing those positions is sometimes questioned. If a significant number of paper silver holders ever demanded physical delivery, the market would face serious stress. That's a known vulnerability in the silver market. It hasn't triggered a crisis yet, but it's something analysts watch closely. Now let's zoom out and think about the bigger picture. We're living through a period of significant monetary change. The dominance of the US dollar in global trade is being challenged. Countries like China, Russia, India, and Brazil have been working to settle trade in non-dollar currencies. That's a slow process, but it's real and it's accelerating. If the dollar loses even a portion of its global reserve status, hard assets benefit. Gold and silver have been money for thousands of years before the dollar existed. They'll still be here regardless of what happens to any particular currency. That long-term perspective is part of why some investors treat silver as wealth insurance, not a get-rich-quick trade, actual insurance against systemic risk. And right now, the premium on that insurance looks relatively low compared to the risks on the table. Can silver pull back from here? Of course it can. No asset goes straight up forever. Silver is known for being volatile. It can drop 10 or 15% quickly on profit-taking or a short-term dollar rally. Anyone watching silver needs to be prepared for that. But the people who've held silver through those pullbacks have generally been rewarded. The trend over the past year has been clearly upward, and the fundamental reasons behind that trend haven't gone away. So short-term volatility is real, but it doesn't change the bigger picture. What would change the bigger picture? A dramatic drop in industrial demand would be one factor. If solar and EV growth suddenly reversed, that would ease pressure on silver. A strong return to fiscal discipline by governments would reduce inflation fears. Higher real interest rates that made paper assets more attractive could pull money away from silver. Those things are possible, but none of them look likely in the near term. So where does that leave us? Silver at $84 with a real path to $100. Not guaranteed. Nothing in markets ever is. But the conditions that got silver here are still in place, and in some ways they're strengthening. Think about what's happened just in the last few months. Gold crossed $3,000 for the first time in history. That wasn't a quiet event. It got attention worldwide. And when gold makes headlines like that, new buyers start looking at silver. They see the price difference and they do the math. Silver at $84 versus gold at $3,000. A lot of people look at that and see silver as the more accessible entry point. That perception alone can drive demand. And demand drives price. There's also the momentum factor. Markets have memory in a sense. When a price level gets broken, it often becomes a floor rather than a ceiling. Silver broke through levels that had been resistance for years. Those old resistance levels are now support. That's a technical reality that traders pay attention to. And $100 is a psychologically significant number. Round numbers matter in markets. They attract attention, they generate headlines, and they bring in new buyers. Once silver gets close enough to $100, the gravitational pull of that number becomes a factor. We've seen this with gold at $1,000, then $2,000, then $3,000. Each of those levels seemed distant until it didn't. Then it happened, and the next level became the conversation. Silver at $100 is that kind of moment waiting to happen. Now, here's something worth sitting with. If you've been watching silver from the sidelines, you've already seen it go from under $30 to $84. That's a significant move that a lot of people missed. The question now is what comes next? Nobody can tell you with certainty. But the setup today looks more compelling than it did at $30. The industrial demand story is more established now. The macroeconomic pressures are more visible now. The institutional interest is more real now. All of those things have developed and strengthened over time. So the foundation under this price move is real. It's not just speculation driving silver to these levels. There are genuine fundamental reasons why silver is where it is. And those reasons point toward continued strength. $100 silver isn't a fantasy. It's a number that's roughly 19% away from today's price. In a market with this kind of momentum and this kind of fundamental support, that's not a big ask. Whether it happens this year or next is something nobody knows for sure, but the direction of travel seems clear. Silver has the attention of the market right now, and that attention tends to have consequences.